Along with the Dow hitting an all-time high, shares of home builders have also been on a tear lately. And today we learned that home prices jumped nearly 10% in January from year-ago levels. That's the biggest annual leap in nearly 7 years. And home builder sentiment is sitting near multi-year highs, encouraging signs ahead of the spring home selling season. Tonight in our series on the American recovery, Diana Olick from the epicenter of the housing crisis, Las Vegas, on how far housing has come and the roadblocks.
Chris and Candace Rogers wanted to move to a bigger house. With Las Vegas homes costing about half what they did during the housing boom, they figured it was the perfect time. Except there was nothing to buy.
We looked at a lot of the existing homes, and some were bank owned and they were in pretty bad shape.
So the Rogers turned to new construction, which is suddenly sprouting up all around the city, with national and local builders alike coming back to what was until very recently a ghost town of unfinished lots. As for the Rogers' old home, rather than sell it at a loss, they rented it out.
With the rental income, that reduces it by about 40%.
The Rogers are a big part of why supplies of homes across the nation are so low. Few want to sell at the bottom, while millions of others are still underwater.
The overall economy's gotten better. The buyers understand now that these low interest rates are a real dramatic opportunity for them. And most of all, the resale inventory's dried up.
And not just in Las Vegas. Nationally, the number of homes for sale today is down 25% from a year ago, according to the National Association of Realtors. Even as the spring market begins, potential move-up buyers are not putting their homes on the market.
What's holding people back from buying a property is a fear of selling their property and not being able to find one. That's what the problem is.
Lack of homes for sale, coupled with huge demand from all-cash investors for distressed properties, are a boon to the builders. They're still producing about half the homes they would normally, but they are seeing big jumps in new orders. Housing is finally helping, not hurting the economy.
The only thing that concerns me is that we have been here before, and the market itself is not what's driving the price increases.
Appraiser Mike Brunson saw the very worst of the Vegas housing boom when speculators and builders pushed prices beyond rational levels until it all came crumbling down. Something he says is missing from this recovery.
It's not that we have new employers coming in and creating tens of thousands of new jobs that are leading to people buying new houses. It's Las Vegas is on sale, and investors are buying up everything they can in the used market.
And those, he argues, are not healthy fundamentals. Houses and prices are going up again, but the recovery is still not on solid ground. For Nightly Business Report, I'm Diana Olick in Las Vegas.
And here to weigh in on the jump in home prices and what it means for the housing market as we near the critical spring selling season, Mark Zandi, chief economist at Moody's Analytics. Mark, welcome. Good to have you with us. Are you surprised that house prices are jumping as high as they are?
Yeah, I am. I wouldn't have thought this a year ago. Things were turning around a year ago. I expected prices to improve, but not near double digits, not the kind of price gains we're getting. Now, part of that is related to the decline in the number of distressed sales. Those are foreclosure sales, short sales, and they sell at a big discount. So if there are fewer of those, that helps to support pricing. So that's part of it. But I've been surprised by the strength of the market. It's coming back faster, at least in terms of pricing, than I would have thought.
So it's the internals of the market that partly explain that. It is also, isn't it, relatively tight inventory. You point out that we actually probably should be producing or adding new homes on the order of more than nearly 2 million, and we're really only adding about 1 million. And I guess some people are holding back on putting their house on the market, thinking prices are going to go higher still.
Yeah, to be precise, and I won't dwell on the statistics, but right now we're producing about 900,000 homes. That's single-family, multifamily, manufactured housing. That's on a per annum basis. In a normal economy, not even a very good one, just a normal one, we should be producing 1.8 million homes. So housing construction is going to double over the course of the next couple, 3 years. And because builders are having a hard time ramping it up, it's hard to get the infrastructure for building back up and running again. We have these very tight inventory, and that's allowing builders and sellers to push up prices and thus these price gains.
There's tight inventory. There's also a very low cost of money. And I guess creditors are actually sort of loosening their standards just a little bit over where they were in 08 and 09.
A little bit. I mean, obviously mortgage rates are at record lows. I mean, you can get a 30-year fixed at somewhere between 3.5% and 4%. So that's just an amazing interest rate. And credit, mortgage credit, is it's not easy to get, but it's much easier than it was a year ago, Tyler, or 2 years ago. And if things continue a year from now, it'll be even easier to get mortgage credit. And obviously that augurs well for future housing demand in the market.
Give us a quick forecast. We won't hold you to it, Mark. What do you think for house prices?
I'm always held to my forecast, Tyler, so go ahead.
What do you think for the rest of the year? How much are they going to gain?
The house prices?
Yep.
Yeah, I think mid-single digits. You know, it should be another really good year and about the same next year, and a lot more construction. And here's the really positive thing. This means a lot more jobs, and that's really what we need for a better economy.
Mark Zandi, thank you very much. Appreciate you being with us.